because China was looking so cheap. A lot of EM flows or otherwise would be pulling money out of India, Indonesia, etc., moving into China, maybe moving back to US as well because tech out there is cheap. Who knows? So my question is, in a year wherein both US as well as in EM China specifically, despite the run-ups, are looking a lot more reasonable than what maybe slightly expensive EMs like India might be looking. How do Indian markets fare for a better part of the year, ceteris paribus?
Yeah, so it is. So you have to look at asset classes. Last year, if you see, it was a quantitative tightening cycle, and emerging markets in general got outflows, which only reversed during the latter half of the year. This year, what we are observing is that the aggressive quantitative tightening cycle by the US Fed may be ending, and there are some projections, and there is hope that by the end of this year, if the US really goes into a recession and interest rates and inflation dip, there is a good chance that the QE might start, because the Fed will be at 5% odd rate. So that's enough firepower in my view. They entered COVID with around 2%, and they brought it down all the way to zero because they had to fight a recession. So if you're making a case that you're going to end into a recession by the end of this year, and the way inflation is going down, be it shelter costs or gas prices or commodity prices in general, so I think there's a good chance that you might see the end of QT, aggressive QT, and maybe at the end of the year, some bit of quantity easing. So in this environment, emerging markets with their relatively higher growth to developed markets there's a chance that they will outperform. Now, within emerging markets, it is possible that India already outperformed last year. It is possible that we may not do that again this year. But to say that will we have a negative flow, I don't think, because it's a basket of asset class emerging markets. So if there is an allocation towards emerging markets, India will get its share, maybe lesser, because the others are cheaper. But you can't make a case that, okay, India will see outflows and others will see inflows in this kind of environment.
But we're seeing that happening, in the last few weeks, right? India has seen outflows. China and maybe a select other EMs have continued to see inflows. So that has happened.
Absolutely. Yeah. So we saw that, but you have to look at it from some perspective. So if you look at the December quarter shareholding data we now have for Nifty 50 companies, we actually saw that the shareholding went up of FPIs actually for the Nifty 50 companies. Overall, India stocks, it held at around 17%, right, for this period. So what is important is you have to give it some time, maybe a quarter or so.
Okay.
Ebbs and flows will be there. You can't make a case out of it actually. But overall, if you look at the shareholding pattern for the December quarter, what we observed was that the Nifty 50 shareholding of FPIs actually nudged up by 50 basis points. Post that, obviously, we saw some selling, but that would have evened out the buying and selling and that kind of a thing. So we have to look at it overall. I think there is no case to be made that if emerging markets overall get closed, that India will get outflows. They may get lower flows for sure. But yeah,